There are always options with options. There are always options with options. Like anything that's important, we have to say it 3 times. There are always options with options. Welcome back, mindful investors. In this video, I'm going to talk about Tesla, its current environment, and the different option strategies. As we all know, there are 4 main option strategies: the long call long puts and the short call short puts. Which one should I implement and why? Well, the answer is always it depends. It depends on how much conviction you have right now. So if we draw a conviction line right here, here is most conviction and here is least conviction. Whereabouts are you right now? Or possibly you're somewhere out here to the moon. But for the rest of us, we probably fall in one of these 4 categories. We're very convicted, like right here. We're somewhat convicted. And then on this spectrum, we think it's a total bubble and we think it'll crash 50+%. And then right here, which means you're somewhat bearish. So you think the stock overshot and it may correct itself, maybe 10-15%. That's a pretty reasonable fluctuation for a volatile stock like this. Now we'll look at Tesla's stock price. Right now it's at $6.95. And then right here, we should notice that the beta is 2.15, which means that this stock tends to fluctuate twice as much as the index. Here we have a PE ratio of 1328. 1328. And anything important, what they say 3 times, 1328. And then we go full screen, we have the 1-year performance right here. We see this sudden spike right here starting from November that took the stock from 388 all the way to 695. So that was a good 70-80% gain in like 6 weeks time. And then if we look at the 2 years and even the 5 years, we see that relatively back then, everything is just flatlining. And then suddenly right here back in March, it bottomed out at $85 and it shot all the way up to $695 within a 9-month time frame. Now we'll look at the options chain for this stock. We'll look at something 3 months away because that'll really tell the whole story. 3 months away, March 19th, 2021. So as we look at the options chain for Tesla right here, it's very, very interesting because the strike prices right here ranges from $1 all the way down to right here, $4,000. At $4,000, there's still a lot of volume right here. And this implied volatility is at 322%. This is extremely high. But wait, if we scroll up a little bit more, we have $1,820 strikes at 1200% implied volatility. This is absolutely insane. So in the present moment, the hype is definitely at the all-time max. But it's not to say that it couldn't go higher. Like anything can happen. Tesla's stock can continuously shoot up in the same projectile. That ran from 388 to 690 in about 6 weeks. It can continue in this projectile and hit the $1,000 mark in maybe February. So with this amount of hype right now, people are still willing to buy at strike prices $4,000. And $4,000 compared to the current price of $695, that's another 6x in the 3-month time frame. That is how much hype this stock has right now. But if we look at the other end of the spectrum, the puts, we have the strike prices from $1 all the way up to $4,000. We'll look at something that's a little bit out of the money. And how do we determine that? It's by this blue and white divider line right here. So anything below 700 right now is out of money for the puts. So we'll look at the strike price of 350. That's exactly half of what is at right now, 695. Divided by 2 is 350. Okay, right here, 350, the premiums, you can still get about $10 from it. And there is a bunch of volume here as well, at 9,000 plus contracts. And so there are people in both the camps. People that say, I'll shoot to the moon to 4,000, and people that say, I'll tank back to 350. Which one is it? Where do you belong? If we go back here, we see that the call volumes are much lower than the puts. So right here, we have 1,000 contracts up here at $2,000, and then a whole bunch here, and then 1,700 contracts right here at 3,500. But for the puts, we have a lot more interest. Right here, we have a couple thousand here, and 30,000 at the $40 levels. And then as we scroll down, we have another 9,000 at the 200 strikes, 7,000 at the 250, 10,000 at the 300, another 10,000 at 350, another 10,000 at 400. So definitely the ratio for puts are much higher than the calls. And that may be reasonable since the stock did go 10x this year from the bottom to the high. Let's go back to the strategies here. If you're most convicted, then you go for the long calls. If you're least convicted, you go for long puts. If you're somewhat bearish, then you go for the short calls. And then if you're still bullish, you would go for the short puts. And now I'm going to talk about where I stand. I'm definitely not in this camp right here. I'm not in the to the moon phase. I'm somewhat neutral to bearish. So I'm around here in the short call phase. And there are a couple reasons for it. It doesn't mean that I'm a Tesla hater. I love Tesla and Elon Musk. I supported them buying this flamethrower in the back right here. And I have long positions on Teslas. But this is just a play. It's a play without any emotions. To me, there's nothing I won't short. I shorted the S&P index, I shorted Apple, I shorted the NIO and Xpeng EV stock, I shorted Cheesecake Factory, so there's nothing I won't short. If I see an opportunity, then I pull the trigger. But it doesn't mean that I hate the company and I think they'll crash to zero. It doesn't mean that. It's just that when we look at the typical line of a stock that goes up, it goes up like this. So there are certainly pullbacks in different areas, and normally just doesn't take off to the moon like this. An exponential curve like this. Like how much fuel does it have? I don't know. I'm just betting it's running low on fuel and it's gonna taper down and possibly consolidate in the 500-600 range. I am not saying that it'll just go straight back down to 200 to 100. I'm not saying that. So that's the line I'm taking. I'm okay if it shoots to the moon because I hold shares, but I'm just thinking in the short term it may correct itself. And right now these shorts are in the red because Tesla continues to break all-time highs week after week. So my bear call spreads are definitely in the red. As we can see here, the short calls themselves at 670 is up 11.7k, but the long calls are down 12.7k. So approximately I'm down $1,000 on this play. And here the Tesla bear spread that goes from 700 to 750 is also down $600. But last Friday, when Tesla's stock price pretty much flash crashed to like 630 from 680, this position was up about $800. So anything can change in an instant. And since I'm somewhat bearish on Tesla right now, I did sell off some shares last Friday. I sold off a couple at 656, 666, and 695. As I mentioned many times before, it's always okay to take profits off the table, especially when your average price in is under 300 at 297, and it more than doubled over the last couple months. So I wouldn't mind taking some off the table. And also another play I made is that I sold my long call Tesla options. This one is a leap. It's September 16th, 2022, $1,000 call. If we look at the details here, it shows that the realized P&L is at $7,000. This whole amount is at 13.8, so this long call has doubled in value as well. And I sold these positions because I'm somewhat bearish. If I was totally bearish, then I'll sell all of it and just buy the long puts. But if I'm somewhat bearish, I'll sell some of it, take some off the table, and make some different plays. My different play in this case is the bear call spread. We'll see how things play out over the next couple weeks after Tesla actually enters the S&P. I think we already seen a local top, but again, I wouldn't mind if the stock continuously go up because I still have my long positions there as well. Anyways, just as a recap, if you're an ultra bull, then you can consider buying more long calls. But maybe dollar cost averaging, because right now I feel that is an ultimate high. And selling puts at these levels doesn't make sense either. Normally my rule is sell on greed and sell on fear. So if you sell on greed, it means the short calls. If you sell on fear, it's the short puts. So right now there's no fear in Tesla. Don't sell the puts, okay? If you have true conviction, then you can short put anytime you want because you're holding it forever. And you feel like the stock is going to the moon, to the thousands, to the 4,000s. So any short puts, you'll win, right? If it continuously go up in a straight line. Anyways, these are my strategies for Tesla and what I'm doing. It's definitely not financial advice. I like to speculate and gamble on certain opportunities. My risk tolerance is definitely much higher than most people. So drop me a like and subscribe if you find any value in the video. Thanks again for watching, take care, and I'll see you in the next one.